Good morning, traders. Welcome to another edition of Technical Talk. My name's Aaron Hill, and today is the 29th of October, the final day of the month. Time is now 8:30 a.m. London time and 7:30 GMT. Okay, markets this morning see US index futures down. Cash markets in Europe also down across the board. The FTSE 100 is currently trading lower by 0.2%. The DAX down by 0.1%, and the CAC also down 0.1%. And this follows the weak lead from Asia Pacific markets, with Australia's ASX 200 down 1.5%, and South Korea's Kospi also sliding to 1.3%. Now, in terms of currencies, we are seeing sterling is pretty much higher across the board this morning, with the pound dollar up by 0.1%, currently trading at 37.98. In terms of the Aussie dollar and New Zealand dollar, we are seeing some price trade in line with risk sentiment and are largely lower this morning. And of course, safe haven currencies are higher across the board. With respect to economic indicators to watch out for today, we have Canadian GDP month over month at 1:30 p.m. UK time, along with the latest US core PCI price index print. Also keep an eye on the UOM consumer sentiment number due out at 3 p.m. Right, very quickly onto the charts. We are now looking at the euro dollar. And as you can see, we are starting to make some headway from prime support at 14.73, 15.83. As I said in my previous in yesterday's market analysis, the combination of resistance on the daily time frame at 16.89 and trend line resistance, and that's taken from the high 22.54, together with 117 on the H1 scale, echoes a possible ceiling in this market. The flip side to this, of course, is weekly buyers, as I've said, powering higher from prime support on the weekly scale at 14.73, 15.83. And this could push price through the noted resistances and make a beeline for the Fibonacci cluster. This is the H4 timeframe, and the Fibonacci cluster comes in between 1729 and 1724. So do keep an eye on this Fibonacci cluster, as it's an interesting area should we break above these the noted resistances on the daily and the H1 timeframes. Right, switching over to the Aussie US dollar. We still have scope to move higher on the weekly time frame, targeting prime resistance at 78.49, 75.99. Interestingly, we are now hitting resistance on the daily time frame, and that is made up of 76.21, 75.51. This is a combination of a Quasimodo support turned resistance, a 200-day simple moving average, which is currently trading at 75.56. Price is not there yet at the 200-day simple moving average. We're about 4 pips off currently. But as you can see, this resistance is also fed by Fibonacci ratios as well. Interestingly, this is clipped to the lower side of the prime resistance on the weekly time frame. So this is certainly an area to keep an eye on. However, in agreement with the weekly time frame, we have seen H4 price climb above the 1.272% Fibonacci projection at 75.29, excuse me. And this could encourage further buying to Quasimodo resistance at 75.99 on the H4 timeframe. Now, with that and the decision point on the H1 timeframe at 75.48, 75.41 being taken out in recent trading, we could see a move into this decision point at 75.85, 75.67 on the H1 timeframe, which interestingly resides within the daily time frame. Daily time frames resistance. So do keep an eye on this resistance here, this Quasimodo resistance, and also this decision point at 75.85, 75.67, given we have room to move higher on the weekly time frame. Right, on to the dollar yen. Ultimately, we are testing resistance on the weekly time frame at 114.38. in line with resistance in the form of Fibonacci resistance at around the 114.61-ish region. And yes, so we have a combination of resistance on the daily time frame and a weekly time frame. Interestingly, we've also seen a trend line support breach on the H4 time frame. This is in line with the higher time frame picture, and this could see price make its way towards supports at 112.25, 112.63 on the H4 scale. Now, knowing we have a bearish bias with the weekly, daily, and H4 timeframes, I did note in previous analysis that I would be looking at the 114 region and the 113.92 area. Yes, this area as a possible resistance if price should pull back to this region. Now, onto the pound dollar. Trendline resistance on the daily time frame is hanging by a thread. This is clear. We did form a mild daily close above this descending line yesterday, which could portend moves to the 200-day simple moving average at 38.48. What's interesting about this is the 200-day simple moving average is in alignment with, well, close alignment with the 1.272% Fibonacci projection at 38.39 on the H4 scale, and also the H1 resistance at 38.51 on the H1 time frame. But do take note that we are testing trendline support term resistance on the H4 scale, and this may be enough to help sellers come back into the fight. But ultimately, we are looking at this 200-day simple moving average right now. Now, for those who have read the previous weekly market analysis, you would have noted I pointed out to keep an eye on this trend line support taken from the low 89.84. The reason I like this trend line is a point of convergence with the decision point at 92.71, 93.53. As you can see, we formed a one-sided move to the downside yesterday. That was a 0.5%, and we shook hands with this area of convergence at this point here, and we are seeing some signs of bullish life. Now, with that being said, that's a wrap from me. Trade safe, have a lovely weekend wherever you're located in the world, and I'll catch up with you on Monday.